Good morning, members. This is the next video in the series of recent exam MCQs, right? In which also we will cover approximately 40 questions in 10 to 12 minutes. So be with me for the next 10 minutes so that we can revise all of these questions wherever the explanation will be required or some practical questions will be there. We will solve them. If any theoretical questions are there, just keep on listening so that those can be imprinted in your mind, right? So let's start the discussion for the day. The first question is on your screen. The fair value is a asset specific thing, market specific thing, entity specific thing, or none. The correct answer is market specific. IP must provide data to financial creditor, insolvency professional IP must provide data to financial creditors within how many days? 7 days. The RP resolution profession is appointed liquidator who can replace IBBI, adjudicating authority, financial creditors, or debtors, right? The answer is adjudicating authority. In fairness opinion, association in the last dash years must be disclosed. The answer is 5 years. If any association you are having with the entity, that can hamper, or even that cannot hamper, but last 5 years, if any association was there, that must be disclosed, right? It cannot stop you from doing that work, but obviously for the disclosure purposes. If foreign currency depreciates and home currency appreciates, that is direct quote. If foreign currency depreciate and home currency appreciates, then the forward rate is less than the spot rate, right? For explanation to understand that, direct quote basically means, don't try to go it in technical terms. The direct quote basically is, let's suppose when you go to a normal retail market and you ask for a person that how much is the price for 1 kg aloo or potato, right? Huh? He is giving you the information that 50 rupees. This is a direct quote for the alus or the potatoes, right? So here, whenever the direct quotes are written in foreign exchange market, it is written as $1 is equal to rupees 70, for example, right? In which the home currency, that is in India, whichever products can be purchased, that is written as a one quantity, and against that the home currency prices are written. That is called the direct way of writing. 1 euro is this rupees, 1 pound for this rupees, one particular currency in this rupees, right? So if I say that question is asking that home currency is appreciating, right? Home currency is appreciating. In that situation, the next or future forward rate should be $1 should be available for 60 rupees as per the normal understanding, right? So then we can say that home currency is appreciating in direct quote, and that is why the question asking you that the forward rate for that should be less than the spot rate in a direct quote kind of situation. This is not part of the syllabus, but for your understanding, I have covered this particular point here, right? Moving down the line, so that is why the question answer was forward rate is less than the spotted. 1 kg aloo or potato or $1 will be available in 60 rupees in the future. If the rupee is becoming stronger, that is home currency is appreciating and foreign currency is depreciating, right? Next. So next question is, perquisite received by a business person should be taxable under income from other sources, income from business or profession, salary, capital gain, salary. Now, by a normal person, if a perquisite is, or a salaried person, perquisite received, it is taxable under the head salary. But if the businessman is getting a perquisite, then that is taxable under the head business and profession. Next. A company has 40% stake in company B. After a buyback, it attains majority. Is it covered under Ind AS 103? The answer is yes. Right. So if you are getting the controlling interest in whatsoever manner, if you are getting the controlling interest, it is covered under 103. Which is not a method for valuation of startup. Value first Chicago method, venture capital method, risk summation method, risk-free summation method. Right. The correct answer for this is risk-free summation method. Buy a put and a call at the same strike price and same maturity. If you're buying basically means a long position, selling means short positions, right? So the answer should be from A or B, because the question is saying buying a put and a call, right? Now if they are purchased at the same strike prices, it is called straddle. If they are purchased at different strike price, it is called strangle, right? So long straddle. The correct answer for this is long straddle. Buy a put at lower strike price and a call at higher strike price. What is this strategy? Again, if you're buying, it is long position. Either it can be straddle or strangle. Just now we have explained that it must be strangle, right? Because we are using the different strike prices. Buy more puts and fewer calls at the same strike price and maturity. It is called, again, buying means long position. It is called strip. It is called strip. If you are buying more puts, right? So it is called long strip. If more put options are purchased, it is called strip. Buy more calls and fewer puts at the same strike, same price. It is called long again, but it is called strap, right? If you are buying more calls, it is called strap strategy. If you are buying more puts, it is called strip. Buy call at low and high strike price and sell two calls in between. That is called, if you are buying one call at low price, buying one call at high price, and selling two calls in between of these two, it is called butterfly. It will look like this. It start will look like this. It is called butterfly spread. But if you are buying it, it is called buying, like, or long position. Or if you are buying call options, then it is long call butterfly spread. If you are buying put option, it is called long put butterfly spread, and vice versa. If you are selling, then it is called the short position, right? So long call butterfly spread. Buy put at low strike price and high strike price and sell two puts in between. Again, butterfly spread, put butterfly spread, and if you are purchasing, it is called long position. Long call, long put, sorry, long put butterfly spread. A bond indenture is an agreement between bond issuer and subscriber, right? Bond indenture. As per RBI, investment under fair value through profit and loss should be shown at, as per clear wording, FBTPL basically means fair value through profit and loss. Question name itself clarifying that it should be recognized at amortized cost or fair value. The answer is fair value. The name of it, this investment is itself fair value through profit and loss. Debenture premium cannot be used for, debenture premium cannot be used for writing of capital losses, redemption premium, none of them are paying dividends. Debenture premium cannot be used for paying dividends. Hypothecation is governed under which act? The answer is SURFACE 2002. A small video was issued for 20 minutes with you. Steps under 103 business combination include identify the acquirer, find acquisition date, record assets and liabilities and goodwill or gain on bargain purchase, and all of the above. Level 2 inputs under Ind AS 113 are observable directly, indirectly, directly or indirectly, and none. Level 2 inputs can be observed directly or indirectly. Level 3 indirectly only, right? Level 1 directly. A transferee is known as transferee, transferor and transferee, who is transferring the asset, is mortgager, mortgagee, both or none. The correct answer is mortgager, who is transferring the property, right? The transferor is called the mortgagee. Oh, sorry. The transferor, by mistake, the transferee is known as mortgagee, right? जिसको प्रॉपर्टी ट्रांसफर कर रहे हो आप, right? जिसको प्रॉपर्टी ट्रांसफर कर रहे हो, that means that person has given you the loan, right? And whoever has given you the loan, we must give him some respect. How to give respect in India? To add G with their name, right? So mortgagee, right? And transferor, who's transferring the property, that means he has taken the loan, right? These are the provisions and Transfer of Properties Act, right? So he must be mortgager. Promoter. Promoter shall dispatch letter of offer at least how many working days before bidding, right? The answer is 5 days. The correct answer is 5 days. Next, in the Hindustan Lever case, valuations was referred from takeovers and mergers, 8 points and valuations, valuation principles and guidelines, and all of the above. The correct answer is valuation principle and guidelines. Now, again, we have not done this topic in detail, only 1 mark question. You can remember this question or other questions that I have given you for practice, and that's it. There's no need to go much deeper into this topic. UPSI, unpublished price sensitive information, means relates indirectly to the company, relates directly to the company, relates directly or indirectly, and materially affects price, always relates to the company. Relates directly or indirectly to the company, but it is affecting the price. That is called UPSI, unpublished price sensitive information. Under which method is the intangible assumed to be the only asset, right? Relief from royalty, cost method, greenfield method, right? In which, if you can recall the notes, the handwritten notes which I have provided you, there was a field, and in that one scarecrow was created with a red pen, if you can recall. That is called the greenfield method. It means only that one asset is there, all other assets are rented or leased, and then you try to calculate the income from that particular asset or value that particular asset. Greenfield method is used to value tangible assets, all intangible spectrums. This was also explained in this, because under spectrum, without spectrum, Airtel or all cannot work at all. Right? So that is a major asset that they are valuing. Next. Mr. R transfers a flat to his wife. Income is taxable in the hands of whom? The transferor. That is the husband, right? Which is not a transfer under the Properties Act, not a transfer. Mortgage of plot, hypothecation of plot, sale of plot, gift of plot, right? So hypothecation of plot is not a transfer under Properties Act. Provision to relating to registered value are under which chapter? This was again the exam question asked to many members. Very easy, we study these rules a lot, but sometimes we forget what was the chapter. Chapter was 17. The correct answer is this, chapter 17. Effective revenue deficit is called revenue deficit minus grants for creation of capital assets. Unabsorbed business loss in merger can be carried forward for how many years? 8 years, including the elapsed years. Bargain purchase gain under Ind AS 103 should be kept under separate head, transfer to other equity, transfer to capital reserve if conditions met. What was that condition? The condition was you have to recheck that whether there was any situation of distress sale. If the answer is yes, then only you will transfer to capital reserve. Otherwise, you will keep it in other comprehensive income, right? So if the conditions are met, then it can be transferred to capital reserve. Calculate the average return on assets if the cost of asset is 2 lakh, useful life is 5, and cash flow after tax is 86,000. Now, this question is discussed in class many times. The correct answer for this is 43%. How to calculate that? Just concentrate on the 86,000. Just a second. My pen is not working. Just a second. 86,000 every year you are going to generate. So for 5 years, how much amount you will generate? 86,000 into 5. That is 4,30,000. How much is the amount invested or outflow? The answer is 2 lakh rupees. So how much is the return generated over 5 years? 2,30,000. This is the return. Okay. Average return per annum, 2,30,000 divided by 5. How much is the return? Return means extra amount that you have generated every year. Averagely, the answer is 46,000 rupees. Right? Now, 46,000 rupees is generated every year as a return divided by 5. 46,000 on the amount invested of 2 lakhs. So, percentage average return 46,000 divided by 2 lakh. 46,000 divided by 2 lakh. So, it will be equal to 23%. Right? 23% should be the correct answer, not 43%. The correct answer for this should be 23%. Yes, the correct answer for this question is 23%. 23%. Next question is again a calculation kind of question. Calculate the EV upon EBIT if the market price of the share is 11, number of shares outstanding 13720, market value of that is 45,000, cash and cash equivalent is 5282, EBIT is 13,500, right? So how to calculate EV upon EBIT? Pause this video here, calculate on your own, then see the solution, right? So for that, how to calculate that? Market value, or first of all, we need the enterprise value. For calculation of EV upon EBIT, we need EV, then EBIT is given. If we can calculate EV, the EBIT is 13,500 already given. EV is calculated as value of equity plus value of debt minus cash and cash equivalents, right? So it is not tough question, but yes, you have to calculate it. The market price of share is 11 and number of shares the company is having is 13720 plus market value of debt is given as 45,000 and cash and cash equivalent is 5282. If you divide it with 13,500, you will get the answer as 13,720 into 11, 150,920 plus 45,000 minus 5282 divided by 13,500 is equal to 14.12. As per the answer I am getting, it is somewhere around 14.52. 14.52. 14.12. 14.51 is the nearest answer. The correct answer should be 14.52. 12. 14. Correct answer is 14.12. Next, in WSEC calculation, weights used are market value weights always. I have discussed this. Even the case studies are there in which the person has by mistake used book value weights, and then we have to use the market value weights. Stamp duty is exempt when a branch of a banking company merges with the subsidiary. Type of budget in case of full employment. If the full employment is there, we should present a balanced budget. Interest rate and 234A income tax is 1% for full month, 1% simple for full month, 1% simple for full or part of the month, and 1% compound, 1% per annum. The correct answer is 1% simple but full or part of the month. So this was the last question in this particular sheet. Next, new updated MCQs of recent exams will be there very soon. Have a great day ahead. Please revise these videos and these questions. All these questions have been given to you as a complete file of 249 questions also for practice. If you want to use that file, you can use that. Or if you want to take the help of these videos, you can take the help of these videos also. Thank you so much. Have a great day ahead.